It's important to understand what really is happening in this market and how do experts think about it. So I had the opportunity to sit down with Nikhil Kamath, co-founder of Zerodha, and ask him about his take on the markets. Listen in to that interview. The Sensex seems to be sitting comfortably at 60,000 and talk has already begun about when it's going to hit 100,000. Markets are in a bull run that maybe have a Teflon coating, whether it's the Evergrande crisis or many other factors. Markets are just not flinching. And what is believed to be as a big part of that boom is the excitement of the retail investors. The number of demat accounts in existence have shot up in the last couple of years. More and more retail investors are jumping in. And the next guest that I'm speaking to is in part responsible for that. I'm joined today by Nikhil Kamath, co-founder of Zerodha, who's speaking with us on what we're seeing in the markets and the role of the retail investors. Nikhil, great to have you on the show. Thank you so much for speaking with us. Let's begin by getting your thoughts on this bull run. Did you see it coming? Are you skeptical about whether it's a bubble or not? Or do you think, like some are saying in the market, that abhi to party shuru hui hai?
Well, I'm skeptical, Tamanna, to begin with. I think too much has happened too quickly. Are markets expensive today? Definitely. Compared to any time in our past, when you compare valuations, it's fairly evident for anybody to see the froth in the markets today. So I'm on the skeptical boat right now, and I'm wondering how long all news can become good news for. If you look at some of the big news events that have occurred in the last year, even something like Evergrande or a certain election going in a certain order, everything seems to be getting converted into good news today. Probably will not go on forever. There will be a reckoning at some point. The timing of that, though, I think is up for anybody to interpret, and nobody can really call the top.
Yeah. One defining feature perhaps post-pandemic has been the frenzy with which more retail investors have come in. What do you think is the reason for that, Nikhil, and are they here to stay? What has been your experience, and can you share the kind of boom that you have seen in users ever since the pandemic began?
Yeah, everybody has seen a boom in new users, not just in broking, but probably everything fintech has done quite well in the last year. There is a structural demand for a place to allocate capital today. I think the biggest moving factor here has been the interest rate cycle. We're a country where people were accustomed to earning 7%, 7.5% rates on your savings account when you open a fixed deposit. That has gone down to such an extent today that it does not even keep pace with inflation. And if you were to take away gold and real estate, which have not done too well in the last 5 or 10 years, there aren't many avenues for a retail investor in India to park capital, to beat inflation, have liquidity, a certain level of transparency where you can see what is happening every day. And stock markets have become the natural outlet in a way for all of that money. I think that trend will continue. Even today at 2% penetration, I think there is plenty of scope for the number of retail users coming into the market to go up considerably. And I would assume that pattern continues to, hold, and the number of people coming in will go up constantly with time.
Yeah. Who is this retail investor of today? If you were to describe a profile of your typical retail investor, I mean, there was a time when the retail investor was usually a gentleman above the age of 45 or 50 who made those decisions of what to invest and where to invest as something that he did along the side. Has that changed dramatically? Are we seeing a new breed of retail investors today, and are they well informed because there is more information available, or are they just going with the flow?
As a proportion of all investors, if you were to account for where the assets under management lie or where the shares lie, I would still assume the age group between 45 to 65, 70, the vast majority of money and assets probably lie in that group. In terms of participation with a smaller ticket size, more number of millennials have come into the market. I think people are definitely adopting investing earlier in life than they would historically. I don't know if the number has changed drastically, but it would have probably moved towards a younger zone. In terms of where that trend will lie in the future, very hard to call. Right now, stock markets, fintech, most asset classes are spoken so widely in the news that it's at the back of everybody's mind, and people are coming in rapidly today. Also, we have not witnessed a correction, a reasonable correction of any sort for a certain amount of time now. So everybody who has come in the last 12 to 18 months, a huge proportion of them have ended up making money. So the way the retail psyche works is when things are going well, you're buying and selling and making a profit more often than not. You're bound to talk about it. Your friends will enter the market. You'll keep checking your computer very often. But it only takes one bear cycle, 1 3-year, 5-year correction. People will turn off their computers and not look at what is happening with stocks very easily. As humans, we love to see when we're doing well, but we wouldn't want any kind of a reinforcement on when we're not doing well. So that changes fast. So if the bull run were to continue, more participation, I'm guessing, if it were more. Yeah, please, Tamanna, tell me.
Yeah, no, I was saying, Nikhil, I'm glad that you're speaking so frankly and as a skeptic in what is a very, very optimistic bull run. But I'm also a little surprised because a bull run works for you. Isn't that the message that you want to be putting out? Why do you feel it's important to also be skeptical and honest that there is a downside and there is another side to this?
Well, I think there's far too much optimism in the market today. I think a little bit of pessimism balances the scale a little bit. Everybody is an optimist, right? Valuations are worrying, especially for newbies who have come in and invested for the first time. I hope they diversify, they're prudent in their risk management, they put some allocation to fixed income and commodities and all of that. Because no cycle continues forever. We're all so swayed today by that fear of missing out, wherein, we've heard of a friend make 50% because he bought stock X. So we want to try and replicate the same. I think time is prudent today to, exercise a little bit of caution, get some diversification in place, put some money in fixed income where the levels of risk are very low. I think those are the things that one should also be recommending today.
Yeah. Tell me what you make of the whole trend of startups coming into the primary markets, this slew of IPOs that are coming in, and in a sense also feeding into this excitement that there are new businesses that new investors can come in with. What do you make of that? Is it a great idea, or is it also a situation where this tide will lift all boats and perhaps not such great picks also get a lot of attention?
I think it's good that the retail investing public of our country is getting to partake in the growth of the economy by virtue of these startups. It would have been folly if these startups were, all to go to, say, America and raise capital through a route which does not allow the retail to participate. So it's a great thing that they're coming into the capital markets and they're raising money. in the manner that they are. There again, they are expensive. They are you're not buying business at a discount or anything like that. They're all, in more cases, they're not fairly priced in. So one has to really research and look upon the opportunity that they might be, the startup or the company that is listing that they might choose to participate in. I guess at the time is again, to really research and know what you're investing into and believe in that story for the next 5 or 10 years, and only then enter that particular stock.
Nikhil, with the rise of the retail investor, in relative terms, of course, it's still a small proportion, as you mentioned, we're also seeing another trend right now of shareholder activism. And it has singed quite a few big companies. iShare, Balaji, Z recently. What do you make of that trend?
I think it's great. For some reason or the other, shareholder activism is not new. It's probably more in the news in India now than it has been in the recent past. But in places like America, for example, shareholder activism is a thing which has been happening for a long time. I think it's great that companies are starting a two-way dialogue with the shareholders of the company, and this will probably lead to better, higher levels of compliance and governance, which is net good for both sides of the market.
All right. I have to ask you about the cryptocurrency craze. I think it's going hand in hand with equities. A lot of, and I don't want to typecast millennials, but a lot of younger, newer investors with small ticket size are now finding it very easy to dip into cryptocurrencies without having to understand or research much into it. What do you make of this? Do you think it's a good idea?
We all have envisaged, a battle between the central bank and the cryptocurrency. It's been long due, and we've been building up to it. It looks like we're getting closer to that point as every day progresses. Crypto had to be taken seriously in some kind of mass adoption before the central banks really come out in a meaningful manner and act for it or against it. But if you look at what is happening in China today and other pockets of the world, I think there will be cryptos to some extent, in one way or another, do take away power from central banks and governments across the world. So they were bound to fight back, and when they come out and try to regulate it and they try to change it in one way or another, it will be interesting to see what happens and which side wins. My money personally is on the side of central banks and the governments kind of not allowing for crypto to thrive beyond a certain extent. So I still stick to that side.
So do you have a message for all of those who are jumping in on the cryptocurrency bandwagon?
I don't think today is the time to have too much allocation to any one asset class. Crypto, again, is a fairly volatile asset class. So I would, as long as you're putting in 1, 2 to 5% of your net worth and you're trying to understand it and invest in it, get some diversification in your portfolio, it's probably fine. The question here is, are you putting 50% of your net worth into cryptocurrencies? Then things get a bit dangerous. So I would, if for anybody's portfolio where they have an under 5% allocation, I would probably assume it's okay to have that.
Yeah. Nikhil, since I have the opportunity to speak with you, allow me to ask you about some exciting news that was in the public domain about a month ago, that Zerodha has received an in-principle note from SEBI for an AMC. Is there anything you can share with us on this?
Nothing that I can share at this point. Yeah, nothing really.
Okay, but I mean, there's no... It's Tell me about the space, though. I mean, the AMCs are making a comeback. A lot of investors stopped their SIPs, and then some went into investing directly. Platforms like yours have made it easy. But do you think there's scope for growth in this space as well?
Well, if you were to take the comparison between India and countries which are, a little bit ahead on the financial penetration curve, where people have more access to financial products, there is a case, I guess, to be made for why more people should invest into mutual fund. There is another serious debate there between active and passive, and which one is better, which one is not. In my limited understanding, I would think passive funds do really well when there is a value available on the table, when markets are not too expensive. When markets are very expensive, you have to ask yourself that question again. So I guess there will be many entrants into this market, and it'll be interesting to see who is able to innovate and who is able to better run a mutual fund. But no real insight that I can bring, upon this or add much value in predicting what might happen in this industry.
Okay. Sure. While I have you here, Nikhil, let's talk about another hot sector, which is real estate. Everyone believes that real estate has finally woken up from its slumber, is going to see the next big cycle, the worst is behind them. Are you on that bandwagon?
Well, again, I'm going to be fairly skeptical here. For me, real estate is two separate categories. There is commercial and there is residential. Commercial real estate, I think there will be a lot of pain going ahead because there's work from home culture. However we disregard it, it is happening. I am working from home. Plenty of people I know are working from home, and they're being more productive in working from home, and that trend is likely to continue. So I see a reasonable amount of pain there just based on that. On the residential side of things, there seems to be some kind of appetite. If you look at stock prices of anything residential real estate, especially in the last 3 or 4 days, everything has been rallying and making new highs. There again, if you look at it from a historical lens, ever since the 90s when we have opened up in India, we've seen a one-way rally. Everything real estate has gone up throughout that time. So we're a bit jaded by the experience of that. We all have come to believe in one form or another that something like real estate can never correct. Even if you were to talk to real estate developers and really savvy investors in this industry, you would often run across the largest ones who will tell you stuff like, land prices can never go down. How can they go down? That makes it worrying. If everybody's on the bull side of a certain trade and believe that the asset can never correct, logically one could assume that if it were to correct, it would be a really big correction and would happen drastically because there are no bears in that market whatsoever. So I remain skeptical on both sides of real estate, maybe a bit more on the commercial side and a bit less on the residential side.